Hello everyone, my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter.
Hello.
Thank you for joining us today as we're looking at the fundamentals that drive the markets currently. So Peter, a new day, a new week. What's new in the markets?
Well, Friday was a little bit more easygoing after the shock the market experienced on Thursday with the US CPI rates. The US dollar edged a little bit higher overall, though I have to note that the USD remains rather stable at near 20-year highs. So there is still some cautiousness within the markets, and I would say that we had little developments in the release as such. We had the retail sales of the US, which decelerated a little bit more than what was expected, but overall it was a quiet day.
And how about the US stock markets?
Well, US stock markets had an interesting reaction in the sense that they were down for the day on Friday, but the issue was that we had a number of earnings releases from major banks. There was JP Morgan, Morgan Stanley, Citigroup, Wells Fargo, and all of them had rates and figures which were better than expected. And that should actually, we expected it to provide some support for US stock markets. That didn't happen. Overall, I would dare to note that market attention slowly shifts towards the US stock markets as we have a number of earnings reports of high-profile companies coming out this week and could grab some attention. And I would also note that the better-than-expected readings of major banks in the US may imply some endurance for the US economy.
Is the pound on the rise today?
The pound's on the rise, yes. During today's Asian session, it was. Actually dropped somewhat on Friday. Today it was reversing losses it had made. But the overall picture in the UK remains quite uncertain. We had UK's Finance Minister Kwarteng, which was fired, and he was replaced by Jeremy Hunt. However, Jeremy Hunt now, the market will try to get a sense of where he's moving, what his plans are, etc., etc. Overall, there's a high expectation that the idea of tax cuts will be reversed in the coming days. By the way, we have to note here that Prime Minister Truss has to face a mutiny within her own party. It was characteristic that over the weekend we had 3 parliament members of the Tory party which asked for Truss's resignation. And mind you that she has been in office only for about 40 days. So it's quite liquid on how developments will come in the coming days, and I expect this week to be rather critical. It's going to be a make or break week for Truss's government.
Is the JPY still weakening?
It was on Friday. It has reached over 140 yens per dollar. And it's stabilized near those levels over today's Asian session. But overall, the situation remains unchanged. So the weakening of JPY, which was caused practically by BOJ's ultra-loose monetary policy, is expected to continue unless we see a market intervention from Japan to defend the yen. And this time, that could be even wider than the previous time, because the previous market and intervention of Japan had little effect and was practically reversed within 2 days. So it's a wait-and-see position here.
And what's on the calendar for today?
Well, we have the New York Fed Manufacturing Index, and for October it's expected to improve somewhat and could provide some support for the US dollar. However, I would be turning my attention mostly during tomorrow's Asian session as we get New Zealand CPI rates. Now, the headline CPI rate on a year-on-year level is expected to slow down. And should that be the case, we may see the Kiwi retreating a little bit. We are also getting from Australia RBA's last meeting minutes. Probably we may be seeing the content being tilted to the dovish side, given that the bank in its last meeting had decided to rate hikes, but at a slower pace than what the market was expecting. And let's not forget also RBA Governor Lowe's comments that as rate hikes progress, they're going to be diminishing in size. And I would be highlighting from China, we are getting the GDP rate, that's for Q3. On a year-on-year level, the GDP rate is expected to accelerate. And on a quarter-on-quarter level as well. Actually, on a quarter-on-quarter level, it's expected to exit the negative territory, show growth once again for the Chinese economy, and that could be a substantial support for the Aussie. I would be also noting, though, from China, the retail sales growth rate, which is going to give us a sense of how strong the internal demand side is of the Chinese economy, as well as the industrial output growth rate. That's also for September. Should that also accelerate, we may see the Aussie getting some additional support, as that would imply practically that we have, or we may have, increased exports of raw materials from Australia to China. On the monetary front, I would also be highlighting today ECB Vice President De Guidos. And should he sound hawkish enough, we may see some support for the euro.
And how about the rest of the week?
We have a number of high impact financial releases. I would make a start with Tuesday, and definitely I would be noting German CEF indicators. And the CEF indicators are expected to drop both on an economic sentiment level as well as on a current condition. So we see more pessimism and at the same time deteriorating conditions on the ground for the German economy, and that could weaken the euro should it be verified. I would be also noting tomorrow from the US the industrial production growth rate. Should there be an acceleration or some improvement, we may see the US dollar getting some support. I would also be noting on Wednesday we're getting UK's and Canada's CPI rates, especially the UK, which, should there be an acceleration, we may see the uncertainty increasing for the UK economy, as that would practically add more pressure on BOE to hike rates at a faster pace, and that could weigh on the UK economy. From Canada, we note that the CPI rates over the past month had slowed down a little bit, in a sign that inflationary pressures in the Canadian economy are easing. Should that continue, we may see also the pressure easing on BOC for more rate hikes. I would also be noting on Thursday the release of Australia's employment data. The employment change figure is expected to remain in the positives, to drop yet to remain in the positives. The unemployment rate to remain at rather low levels, 3.5%, and that could be implying a tight Australian employment market, which could provide some support for those. I would also be highlighting on Thursday the release from Turkey of CBT's interest rate decision. Now the market's expecting a rate cut for the 1 week repo rate of around 100 basis points, from 12% to 11%. Should that be the case, we may see TRY weakening further and inflationary pressures within the Turkish economy increasing as well. Last but not least, on Friday we're getting the UK and the Canadian retail sales growth rates. Possible slowdown could weigh on both currencies, while in the American session we're getting Eurozone's consumer confidence.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
Welcome to the technical analysis part of the presentation for today. In front of your screens, we have the 4-hour time frame chart of the US dollar index. Mind you that all the charts which are to be presented are to be of the same time frame unless otherwise stated. Now, with no time to waste, let's have a look at what the US dollar index has been telling us. Now, we see that the US dollar index rose. That was on Friday. There was some wide volatility, but overall ended the day in the greens. And despite the rise, that tends to show us that there is still a sideways movement between the 113.45 resistance line and the 112.10. As long as the price action remains within this channel, we tend to maintain our bias for a range-bound movement. On the other hand, note that the RSI indicator is near the reading of 50, also implying that the market is rather indecisive about the US dollar index direction. Nonetheless, should the bulls take over, once again we may see the price action rising, breaking the 113.45 resistance line, and aiming, if not even testing, the 114.70. Mind you that it had provided some substantial resistance, and that was around the 28th of September. Now, on the contrary, should the bears take over, we may see the price action dropping, breaking the 112.10, and start actively aiming for the 110.80. You can see that there was wide support here, while even lower we note the 110, reversing the intense downward movement of the US dollar index, and that was around the 4th of October. It was a beautiful V-shaped reversal. Overall, mind you that we have changed the R1 and the S1. We actually adjusted it so it can reflect better the sideways movement, as we have also dropped our resistance line, which was somewhere here, and now we see a clear cut movement from the 112.10 to the 110.80 that occurred practically on the 6th of October. It was to the upside, but it could easily be done to the downside. As the ultimate bearish target, once again, we have mentioned the 110 support level. Let's have a look at Euro USD. Euro USD, which rose, and definitely we're going to need some corrections here. Okay, let's do this. First, the support line will have to be adjusted, and the first resistance line will have to be adjusted. Definitely the R2 is out of the book, not required. Okay. That shows us the limitations of the pair's current sideways movement. Mind you that it dropped a little bit, however it's still recovering during today's Asian and early European session. For the time being, we tend to maintain a bias for sideways movement. Note the RSI indicator running along the reading of 50. But before we make any further comments, let's correct the labels. R3 now is being placed at parity level. R2 is at 0.9925. R1 is now being placed at 0.9810. Let's lock this in. Trying to escape, no way, there's no escaping here. Now the first support line is now being placed at 0.9660, a little bit higher. 0.9665. Yep, that's better. $0.9540 remains quite valid, as does also the 0.9440. So for the time being, we tend to maintain a bias for sideways motion of the pair between the 0.9810 and the 0.9665. Should there be a selling interest which is to be expressed by the markets, we may see EUR/USD's price action dropping, breaking the 0.9665, which provides support here, 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 and start aiming for 0.9540. Once again, this level showed superb support for the price action of EUR/USD. Note that it was also aimed for here, didn't reach it quite as much. But there was a nice, beautiful V-shaped reversal here, and that was on the 28th of September, the Asian session. Should, on the other hand, the bulls take over and we see that the pair finds fresh buying orders along its path, we may see the price action of EUR/USD rising, breaking the 0.9810, which provided support on the 14th of October, that was on Friday, and start aiming for 0.9925, providing resistance here, and that was the 6th of October. A little bit higher, we also note the parallel level, and it's very characteristic how this peak here provided resistance, while also at this point the level wasn't able to actually hold its ground, but it provided wide commotion for EUR/USD's price action. So it seems to be a valid level. Let's widen a little bit, that's it. Beautiful. Let's reposition the labels. Remember, display is not some functionality which is just for the beautification of the chart. It allows you to have a very quick look and with just a glance to see where the supports and the resistance lines are and how to trade practically. Okay, let's have a look now at cable. GBP/USD for our chart. GBP, which has risen, broken above the 1.1880 and seems to be stabilizing. However, we will have to make some readjustments here as the price action has set the new support and resistance lines, and this would be the 1.1145 support line, so we have to color this in green. And we're going to be lowering the resistance level. Could go as low as this one at 1.1350. We're always talking here about EUR/USD, cable, and that would be GBP/USD. You can see always the name of the chart in the upper half. So thank you very much for the question, Marius. By the way, let me make a small correction also on the resistance line. Now the second resistance line is being placed at 1.1350. And I would be lowering also this level here. One, aimed for, tested, tested, tested. That's pretty good. And I'm keeping that at 1.4950. Sorry, 49.45. And let's make this permanent. 1.14. That's it. Once again, we see a sideways movement. Oh, we deleted the final resistance line, which would be here. 1.1740. Let's make the corrections now in the support levels. 1.1145, the first support line. Second support line being placed now at 1.0925. And final support line being placed at 1.0760. Locking this in. That's it. The sideways motion prevails, with the upper boundary being the 1.1180, the low boundary being the 1.1145. Note of warning here. See how the RSI indicator is on the rise. It has placed some considerable distance between the price action of the RSI indicator and the reading of 50 to the upwards. It's actually right now at 58. So we may see some bullish tendencies for cable rising. For the time being, we maintain our bias for a sideways movement as long as it remains between the 1.1180 and the 1.1145. So that should be a mistake. Yep, let's correct this. And the 1.49. Here it is. The sideways motion is between the 1.1350 and the 1.1145. Should, for us to adopt a bullish outlook, we would require a clear breaking of the 1.1350 and the price action to aim, if not even breach, the 1.4995, 1.1495, as we would require a higher peak than this one. For a bearish outlook, we would require a drop, a breaking of the 1.1145. That would be a prerequisite for a bearish outlook, and the price action to start actively aiming for the 1.0925. Let's have a look at USD and JPY, a safe haven. Has been on the rise. Definitely we will require some corrections here. Let's make them in green. 147. Definitely this is a new resistance line. And that's being placed at 148.9. $150.75, the second resistance line. In red, please. $152.50, another one. Okay, let's widen this and correct also the labels. You can see the name of the chart always says. Let's open it a little bit. 48. Sorry, that should read 148.90, the first resistance line. 147 is the first support line. It used to be a resistance line, you can see it here. However, given that the price action is now above it, we switch its role into a support line. 145, and finally 143.50. Nice touch here. Also resistance line here and here, and this support here. So it's pretty valid level in keeping that. For the resistance lines above the R1, we had to drive back to historical data to see daily openings and closings. However, these are not available on this chart. We tend to maintain a bullish outlook. Sorry, let me correct this. We tend to maintain a bullish outlook for the pair, and as long as the price action remains above the upward trend line, we see that as being valid. Okay. On the other hand, we note that there is a stabilization. So I would expect, given also the RSI indicator, which is clearly above the reading of 70, it's currently at 77, the bullish sentiment to be maintained and the price action to rise, break the 148.90 and start aiming for the 150.75. On the other hand, though, we have to note here that the RSI indicator is almost signaling, not almost, it's signaling that the pair is at overbought levels and it may be ripe for a correction lower. So there is a word of caution here. The correction lower should not take us by surprise. And should that be the case, we may see the price action dropping, breaking the prementioned upward trend line, breaking the 147 support line, and start aiming for the 145. Such a scenario would be signaling practically a bearish outlook. On the other hand, should the stabilization remain, and despite a possible correction lower, and we may see the price action remaining between the 148.90 and the 147, that would be signaling especially the breaking of the upward trend line and the respectance for the 148.90 and the 147. That would be signaling practically a sideways motion. For the time being, though, we remain bullish, and we would expect the price action to break above the 148.90 and start aiming for the 150.75. Mind you, always keep in mind USD JPY is at such high levels which Japan could intervene in the markets at any given moment to defend its currency. So that would be an issue. And definitely that would be a downward issue for USD JPY. Note how the market reacted at the last one. That was around the 22nd of September. Yep. But in my opinion, given that the market operation of Japan, which provided some support for USD JPY, overall the gains made for JPY were raised in a matter of a couple of days. I would expect the next market intervention, should it occur, to be far wider, far more intense. And that could drive USD JPY substantially lower. Okay, let's have a look now at the other safe haven currency. That would be USD CHF. Hello, Marcus and Ibrahim. Let's have a look. Now, USD CHF has been in a sideways movement with wider volatility. It tends to reflect, in my opinion, more the movement of the US dollar index. It's characteristic how USD CHF here jumped and now corrects lower. We tend to maintain our bias for a sideways motion, and And I would also be noting that most probably that would be confined between the 1.0050 and the 0.9960. Practically, it's revolving around parallel level. Mind you that the RSI indicator was above the reading of 50 and is dropping, aiming for that level, implying that the market has some uncertainty about the pair's next leg. On the other hand, though, should the bulls take over, once again, see that some have mentioned that there are bullish tendencies which can be formed like this. We may see the price action bouncing on the upward trend line, rising, breaking the 1.0050, which had a peak here and here. Definitely, I would expect the next peak to be near the 1.0120 resistance level here. On the other hand, should the pair stabilize, definitely the first signal would be a breaking of the pre-mentioned upward trend line. For a bearish outlook, though, we would require a breaking of the pre-mentioned upward trend line. I would also require a breaking of the 0.9960. The price action to start aiming for 0.9860. Definitely it has to be a lower trough than this one, than the previous one. That would allow us also to start drawing a downward trend line showing the limitations of the downward movement. Okay, let's have a look at AUD USD. AUD USD, which corrected higher and has broken just above the 0.6235, but the bearish tendencies are clear. And as long as the price action remains below the downward trend line, which was incepted since the 13th of September, we tend to maintain this downward outlook, this bearish outlook. I would expect AUD USD to drop, break the 0.6235 and aim for the 0.6110. Definitely the next show will be lower than this one. Mind you how the pair practically was not able to rise further as it was prevented by the 0.6345 validifying practically the pair, the level, but also due to the downward trend line. The RSI indicator, on the other hand, though, is below the reading of 50, but it's nearing. It's rising, so we may see some stabilization taking place here. In which case, I would expect the price action to rise further, possibly stabilize between the 0.6345 and the 0.6235. A breaking of the downward trend line would be a first signal for a change of trend. And should the price action break the downward trend line, but also disrespect the 0.6345 resistance line, we may see it aiming for 0.6530, which provides resistance here, here, and here. So it's a pretty valid level. On the other hand, the 0.6345 resistance here and here, so it seems pretty valid. Not to confuse you guys, once again, our main idea here is that as long as the downward trend line continues to limit the ascent of the price action, we tend to maintain a bearish outlook. And in which case we would expect the price action to maybe rise a little bit higher, but overall correct lower, break the 0.6235 and start aiming for 0.6110. Definitely, on the other hand, the fact that the RSI indicator is rising towards the reading of 50 and the last true was not as low as the previous one tends to imply some stabilization. Mind you that the price action seemed to be confined between the 0.6235 and the 0.6345. Despite some breaks here and here, we could discuss a correction lower of the S1, and that would imply practically a sideways motion. Let's move now to USD CAD. In a similar but reversed movement than the Aussie, the Loonie is also correcting against the US dollar after losing ground. That was on Friday. And it has just corrected at this point. I think a correction of the support and resistance levels would be necessary. And I would be raising the resistance line here. That would be the 1.39. And let's go have a look at the validity of R2. Let me correct this first. Yeah. Nice sideways movement. It's definitely clearer than the Aussies. Drilling out to the daily chart. This peak here. That would be the 1.4045. Locking this in. The R3 is now being placed at 1.4170, resting on this peak here. It seems pretty strong. I'm keeping that. Okay, let's drill back to the 4-hour chart, readjust the chart, and let's make the necessary corrections on the labels. That's it. So for the time being, we expect the sideways motion between the 1.39 resistance line and the 1.37 support line to be maintained. We're talking about a span of around 200 pips here. Mind you that the RSI indicator is near the reading of 50, also implying and descending, but it may be implying here that we have a rather indecisive market about USD CAD's direction of its next leg. Should the bulls take over and for us to adopt a bullish outlook, we would require a clear breaking of the 1.39 resistance line. Practically, we would require the next peak to be higher than this one. Be somewhere here, or even higher. Start aiming for the 1.4045. And that would allow us practically to start drawing an upward trend line. On the other hand, should we see a selling interest being expressed by the market, say for example in the case that we see the RSI indicator dropping below 50 and still dropping, we may see the price action break the 1.37 support line and start aiming for the 1.35, which provided nice support here. Okay, let's have a look at Kiwi and the DUSD. Nice sideways motion, already limited. Very, very nice. Let's make some corrections on the labels as well. Despite the strengthening of the US dollar and the correction low of the pair, it had respected the 0.5535 support line. Actually, it didn't even reach it. So we tend to maintain a bias for a sideways motion between the R1 and the S1. It's also supporting the notion of a sideways motion here. The fact that the RSI indicator is pretty near to the reading of 50, it's actually at 48.6. And it's indicative of how the price action of the RSI indicator revolved around the reading of 50, going a little bit higher, a little bit lower, but always staying close to that level. For a bullish outlook, we would require clear breaking of the 0.5650. Practically would require a higher peak than this one. And the price action to start actively aiming for 0.5810, something which would allow us to draw a nice upward trend line and show the limitations of such a possible upward movement. Mind you that the 0.5810 provided resistance here and support here, so that would be pretty valid as it was tested by both sides, both to the downwards as well as to the upwards. On the other hand, for a bearish outlook, we would require a clear breaking of the 0.5535, the price action to aim for 0.5430. Now, some of you have asked to have a look at US stock markets. Let's go to Dow Jones. Next time, please define also the index, and we'll get straight to the heart of it. For the time being, US stock markets, I think Dow Jones is pretty representative. Now, the price action has risen above the 29,670. Let's correct this into a support line, given that the level has also provided support here. That will be during today's Asian session, if I'm correct. Nope, that was in the late American session yesterday, on Friday. Yep. Let's go hunting for a new resistance line. I'm placing it somewhere here. Nice peak here. It's more indicative if we see it to the daily chart. Sorry, 1 hour chart, which will just out of it. And we had a breaking. Okay. This is an even better peak here. Back to the 4 hour chart. Note how we have moved across levels and time frames in order to find a better solution. That would be this 32,000 in red, 630. Have a look at the 600. Okay, could be higher. 630 it is. 40, 50. Even more. 32,700. 680. Touchdown. Readjusting the chart. Let's correct the labels. A wide spectrum here. We could be placing another resistance line here. And actually, I will. Next one, that would be the R4. And this would be the R3, 32,000. $31,180, 30,340, which is the R1. It was tested here and here. 29,670. $28,915. And the final one would be at 28,130. So we tend to maintain a bias for a sideways motion between the 30,340 and the 29,670. We place our confidence in that direction due to the price action of Dow Jones actually hitting a ceiling at 30,340, while the floor seems to be at 29,670, could be a little bit lower. Overall, the big picture, though, seems to be that the price action is confined between the R1 and the S1 for the time being. On the other hand, some of you are arguing, yes, that we may have a bullish movement, yes, but for a bullish outlook, I would require a clear breaking of the 30,340, a clear breaking, and the price action to start aiming for the 30,180. On the other hand, for a bearish outlook, we would require the price action of Dow Jones to drop, break the 29,670, which provided support here, resistance here, here, and start aiming for 28,950. Sorry, 915, which provides support here and here. Lower than that, we also note the 28,130. Let me have a check at the validity of that level once again. We should go about 2 years back. So let's drill out to the daily chart. Yeah, it was a former resistance line. And that was around end of August, beginning of September 2020. Readjusting the chart, sorry. Once again. Here we are. In the daily chart, it's even more clear how support is being provided at the 29,670. Drilling back into the 4-hour chart, and that should be it. Tomorrow we have also a look at gold's price, how it was moving, and oils. From all of us here at IronFX, best wishes for solid trading.
Hello and welcome to another educational video. A commodity currency is a currency that is influenced by the price movements of primary commodities. This means that the country of that currency depends on the export of raw materials for income. When we refer to commodities, we mean minerals like copper, iron ore, and coal, energy products such as oil and gas, precious metals, and dairy products like milk. Australia, New Zealand, Brazil, South Africa, and Russia have commodity currencies as their economy depends on commodity exports. The top 3 most traded commodity currencies are the Canadian dollar, the Australian dollar, and the New Zealand dollar. The Japanese yen is also considered a commodity currency as it is influenced by oil prices due to its reliance on imported oil. For example, Australia is one of the biggest exporters of coal and iron ore in the world and exports massive quantities of gold and petroleum. Because of this, commodity prices directly affect the value of the Australian dollar. Australia is also linked to China, as China is Australia's largest trading partner, with Australia exporting iron ore, coal, and gas to power China's growth. If China experiences a drop in economic activity and growth, its demand for raw materials and minerals would also drop. As a result, Australian producers will suffer and the value of the Aussie will fall. Similarly, the Canadian dollar is strongly correlated with commodity prices, especially oil, as Canada is the fifth largest oil producer globally. Because oil and fuel are Canada's biggest exports, the oil price has a massive impact on Canada's economic health and stability. So when oil prices rise, the Canadian dollar also rises due to its dependence on its export markets. New Zealand is the biggest export of milk products and exports other farm products such as meat and wool. The New Zealand dollar is influenced by China and the Asian continent's economic performance, as China imports huge quantities of dairy products from New Zealand. Market sentiment can also affect the value of commodity currencies. Precious metals are seen as safe havens, and if the value of gold rises, commodity currencies can also increase in demand. However, negative sentiment can push down the value of other commodities, such as oil. Thank you for watching.
You're listening. The webinar has been recorded. Okay. Oh, it's recorded already. Can I just pause it? Hello, hello. Good afternoon, everyone. Thank you for joining us. Hey there. If you can hear me okay, just put it into the chat. Let me know that you can see my screen and you can hear me all right. Just wanted to check that we have everything set up properly. Before we get started with today's topic on the MACD strategies. So for those of you who are joining us, who have turned up early or on time, welcome again. I'll give it a couple of minutes before we get started. We'll see who else streams in. Hey, Techno, can you hear me okay? Just wanted to check on that. All right, 1 or 2 more minutes and we'll get started. Quite a interesting and probably a little bit of a heavy topic today, so want to get started soon. Hey Gwyn, how are you doing? If you can hear me okay, just let me know, put it in the chat. Just want to make sure that the sound and the audio is coming through okay. Super, super. Thanks for that. Today we are with IronFX on the webinar series getting through the MACD strategies. So one of my favorite topics here. So looking forward to this session. I'll give it a minute more and we'll get started. We'll see who else streams in. I hope your trading has been okay. If you have any questions, please feel free to, any trading questions, please feel free to let me know. Put it into the chat and I'll be happy to help you through that as well. Okay. So let's get started. I'm coughing a little bit. All right, let's get started. As I was sharing with you, we are looking at the MACD strategies today on the webinar series with IronFX. As usual, before I jump into, or before I get the webinar started proper, just a quick disclaimer there, or here is that any information shared in this webinar should not be considered as investment advice or investment recommendations, but instead as an educational material only. All right. So I will be sharing with you how to apply the MACD, or what's the MACD strategies about, how to apply it to your trading strategy. If you do jump into any trades, make sure you do your own due diligence, make sure you check your margin, check your leverage, make sure you do your analysis before you jump into the trades. All right. E-certificates will be distributed on this webinar. I'm not sure about the e-certificates. I will check on that. I'll probably let you know at the next session again, because I'll check that and I'll get back to you on the next sessions. All right, Gwyn. Okay, so let's get started now. Just a quick introduction. My name is Jin. Well, everyone calls me Jin. My name is Jin Dao. I'm one of the prop traders and market analysts, and I've had many years of trading experience. So I'll be happy to guide you through. MACD is one of the strategies, or one of the indicators that I use to in my daily trades. So I'll be happy to share with you, my point of view, the way I use it, and how you could actually apply the MACD to your strategies as well. Okay. So again, if you have any questions at any point in time, please feel free to put it into the chat. Don't wait for me to take a pause, because you never know when that's going to happen. So put it into the chat. I'll jump onto your question whenever I see it pop up. All right. So with the MACD, today what we're going to be going through, a few key points here. I'll be sharing with you what the MACD is. Okay, actually, while you're in the session, let me know, do you actually use the MACD, right? Do you use the MACD as part of your trading strategy? So at least I know whether I can tweak it to help you a little bit more. So we'll go through what is the MACD. We'll interpret, I'll teach you how to interpret the MACD, the components of it, and then the MACD trading strategies. All right, I'll share with you some trading strategies with that, and how to combine it with your own trading strategies. Okay, so quite a few things to get through today, but I'm sure it's going to be a nice, fun session. Do let me know if you have any questions moving forward. So what is the MACD? If you do use the MACD, let me know again. But what is the MACD? Basically, MACD is the moving average, convergence, and divergence. All right, it's a convergence and divergence of the moving average. It's not just a simple moving average. It is calculated in a different way, but the MACD is a short form of the moving average, convergence, and divergence. It is a momentum indicator. It is a momentum indicator, and typically it is also recommended that you use it in a trend following scenario. Right, so when you see it's a trending scenario, then you would apply the MACD to look to see whether, hey, is it going to continue? Is there strength in that move, or is there possibly going to weaken, or is the move going to weaken, stop moving, or to possibly reverse? So a momentum indicator that you use in a trend following scenario, I will at the later part of this session also share with you how you could use it, possibly as a bit of a potential reversal indicator as well. Okay, quite simply, you can use the MACD quite simply just by looking for that crossover of the MACD, the moving average, convergence, and divergence. And when you see a crossover, it would either trigger a buy signal or a potential sell signal. All right, so you're looking for that crossover on MACD to trigger either a buy or a sell signal. It's a technical indicator, so it's all based on the charts there. Okay, so quite simply, that's the few key points on the MACD. It is made up of four components. First one, the MACD line. All right, MACD line is actually a calculated line, where, just to get into a little bit of the technicals, I don't want to go too much into that because you don't really have to know how to calculate it. It's all done there on the charts for you. But MACD line is actually the 12 exponential moving average minus the 26 exponential moving average, right? The 12, you can see here, oops, with the mouse, the 12 moving average, 12 exponential EMA minus the 26 EMA, right? That's the first component. The second component is a signal line, which is the 9-period EMA, right? So these are the two MACD, the two lines on the MACD. You typically see crosses like that. That would be the MACD line, and then the signal line would be another one towards the downside, the 9-period moving average. Between, and that's what you would call a crossover when the lines intersect. Between the MACD line and the signal line, you get the histogram, right? The histogram are bar charts. So this one will be the bar charts. I'll show you this. Right, my drawing is terrible, but I'll show you this in terms of the charts as well. And then the zero line. Okay, the zero line. So 4 key components to pay attention to when you're looking to apply the MACD onto your trading strategy. How it looks like. This is your MACD line, right? You see that blue line there, that's your MACD line. You can always change the colors as well according to your preference. Together with the MACD line, that's a signal line, right? So that's MACD line, that's a signal line there. You see a histogram, which is the bar charts. And the bar charts or the histogram actually tells you that length of that. So the length of the histogram actually tells you the distance, or gives you an indication of the distance, or you consider the strength of the MACD, right? So the distance between the MACD line and the signal line, right? In this case, you can see that because the MACD line is below the signal line, the histogram points towards the downside. And then you can see that as that gap widens, the bar gets longer, all right? Then as it narrows back up, you can see the bar gets narrower again, widens, get longer again before it narrows back up. So typically when you see a red histogram, you're going to see price moving towards the downside. When you see a green histogram and also the MACD lines, you're going to see price moving towards the upside. Okay, because you're going to see that distance between the MACD line and the signal line. And the next very important thing is that zero line there, right? That middle line. Yeah, there's a zero line, but it's the middle line. We actually use the zero line to actually help us gauge the potential strength, and also possibly the speed of the MACD and the price movements. Okay, see a question there. Can we get a playback of this session? I'm pretty sure it is being recorded, so I'm pretty sure it will be uploaded possibly onto YouTube. So check out the channel. I'm sure you could find it there. If not, then I will get some info on how to get that sent out to you guys as well. All right. So I hope if you've just missed a little bit of it, but it's always good to check back on the sessions in case you've missed some bits and pieces. But if during the session you missed any parts or you would like me to elaborate further, let me know. I'll be happy to go through parts of it in extra detail. All right. So again, remember 4 components to the MACD: the MACD line, the signal line, the MACD histogram, and the zero line. Okay, so how do you apply this? What do you consider when you're looking at the MACD? Oops, right? Okay, there we go. So when you look for a selling signal, right? A selling signal is when you see the MACD crossing over, the MACD line crossing over the signal line. That blue line going above that signal line, the yellow line or the orange line, and crossing towards the downside, right? Crossing towards the downside, that's where you would say, hey, I found or signaled a selling opportunity, a selling signal. And in this case, based on this example, you can see that based on that line as it crossed over, right at that point there, we did see price move towards the downside. Okay. On the other hand, when you look for a buying signal, you look for the MACD line to cross up from that signal line, right? Up and above that signal line, you're going to see price move towards the upside. You're going to see price move towards upside. In this case, you can see that it did move. It did move up, but not immediately. It moved up a bit gradually towards the upside there. Okay, so there are factors that could influence or does influence the strength and the overall move of the MACD, which I'll share with you in a little bit more detail later into the session. Okay, but the main thing is what you're looking for here is that crossover, right? The MACD crossing down from the signal line to signal a selling opportunity, and the MACD line crossing up from the signal line, signaling a buying opportunity. Okay, so quite straightforward. Cross down, looking for price to move lower. Cross up, looking for price to move higher. Okay, so when you think about your MACD, you're going to consider a few things, right? You're going to consider a few things. Oops. First, you always know it is called the moving average convergence and divergence. And we all know that for moving average, it is always going to be a little bit lagging because price needs to move first for the moving average to draw 1 point, right? A 9-period moving average would need price to move before it draws a point after 9 and then move again before it draws another point. So it is a lagging indicator, okay? And because it is a lagging indicator, there will be situations where price has already moved, right? Price has already moved. And then you see that the MACD crosses over, which actually would give you some fake signals, right? It could give you some fake signals because, like just on the example we just saw here, crossover, price actually did move up, right? Before it came back down again before moving back up. So it could give you a little bit of a false signal because it is that little bit of a lagging indicator. What you also want to consider when you're applying the MACD as a trading strategy is that crossover strength, right? That crossover strength. Like I was sharing with you, how do you determine that crossover strength? There are two components to consider a crossover strength, right? One, the first one is when it's at that, when you want to consider that zero, line, right? If you see that in this case, that's a zero line, and you see MACD crossing below that zero line towards the upside, then we're going to say it's a strong buying opportunity. If you see a zero line, but then you see MACD crossing towards the upside above that zero line, price could still move up, but we're possibly going to see it not climbing too strongly towards the upside. It might be a very gradual move towards the upside. So that's the first one that you want to consider in terms of strength, or how to tell the strength of the MACD is that zero line, right? Consider where is that crossover, whether it's above or below that zero line. And also the crossover strength, you want to consider the histogram, right? We're going to consider histogram because you want to see the distance between the MACD, the space between the MACD. If it's narrow, right? If you do see MACD crossing, maybe just like that, not doing too much, histogram is going to be very small. It's going to be very weak. You're not anticipating a big move towards the upside, or if we see it crossing down like that, you're not going to anticipate a big move towards the downside. So look at the histogram and also the zero line to give you an idea of the strength, the possible strength of the MACD. And then, like I was sharing with you before, you could use MACD to help you identify potential reversals in price, right? You could see price moving towards the upside, and then maybe at a support or resistance level, you see that price has hit and it's consolidating at that area, and just happen you see that the MACD actually crosses at that same point. So as it consolidates, you see MACD crossing down. You might actually use that as another indicator to tell you that there's a potential reversal towards the downside, right? So use MACD with the for a potential reversal, but it needs to pair up with either a support level or resistance level, or possibly with some news coming out. You might see it coming close. So you might actually see MACD coming very close together with a news coming out. If it does break, then you could see price push towards the upside for price to move up. Okay, so few things to consider when you're looking at the MACD trading strategies. Lagging indicator, just remember it's a lagging indicator, could give you some fake signals, right? No indicators is ever 100%. So it could give you some fake signals because it is lagging. In terms of identifying or considering the strength of the move, right? You look at the crossover strength, you consider the zero line and the histogram, and then you use it at a support or resistance levels to help you identify a potential reversal in price as well. Okay. So just to give you a few examples here, applying the MACD strategies in terms of a buying opportunity. In terms of a buying opportunity, you can see here that we saw a crossover. Okay, the MACD line crossing up from up and above that signal line, which led to price moving towards the upside. Okay, so now we're only looking for buying opportunities. I know you can spot a few selling opportunities around, but we're looking for buying opportunities here. In this case, again, right, remember that this is remember that this is below the zero line. This is all below the zero line. So when you're looking to buy, draw it over here. This is the buying. If it crosses over here, this is buying opportunity. If it crosses above that zero line, and you're looking for that selling opportunity. Okay, so in this case here, you can see that the MACD line crosses up from that signal line, but price actually moved up a little bit before turning back down again. All right, so in this case, this worked very well as an indicator. This didn't work. All right, it moved up a little bit, would have been too late if you got in there because I've gone down and closed you out. Again, at this point, you see a crossover again. All right, you can see that histograms are pushing towards the upside. We do see a brief push towards the upside before turning back down again. Okay, so this could also work because it did move towards the upside relatively strongly. Again, another one here, this is an interesting example here, is that it has crossed, but it hasn't really, I'll take that, let me just do that again. All right, so you can see here that although it has crossed, but you see that the histogram isn't very strong. It hasn't have big bars towards the upside or towards the downside, crossing over, hasn't really formed that big distance between the MACD line and the signal line. And that's why we saw price zigzagging and moving lower again. Okay, so in this case, that example or that signal didn't work. All right. And then the second last one in terms of the buying opportunity, we're looking at again across. All right, we saw a good, nice formation of a histogram towards the upside. Then we saw price actually move quite strongly towards the upside. So this one works, right? Oops, let me draw a proper tick. All right, so this one works. And then again, at this point, a good crossover here Nice histogram level showing that distance between the MACD line and the signal line. And we actually saw that price actually zigzagged and moved towards the upside. Okay, so this one works again. What you should notice here is that we have had 1, 2, 3, 4, 5, 6 examples here, right? 6 examples here of a buying opportunity on MACD, and 2 of the 6 failed, right? 2 of the 6 failed. So it's not a very high, right? At this point, if you just looked at the MACD alone, if you just did nothing but looked at a crossover, it's not a very good indicator, right? It's not a very good indicator because if you just looked at the crossover, it gives you almost that 50-50 chance of making money, right? Which is terrible. Some other things you want to consider, right? I'll share with you later as well, but I'll go through a bit briefly now, is the trend, right? In this case, we saw it bounce off a support level, pushing towards upside. That trend is towards upside. That's why this worked at this level. Why this and this didn't work is because that trend was towards the downside, right? The trend was towards the downside, hasn't formed at a key support or resistance level. That's why we saw price move slightly up before turning back down again, right? In this case, again, big downside move, price move slightly up before turning lower again. At this point, possibly at a key support level, that's why we saw it bounce up, came back down, again, the key support level before we saw that reversal or that push towards the upside. So some things to consider here. And just to warn you as well, if you only looked at the MACD in terms of a crossover, then it's going to be a 50-50 chance that you can make money. You do need to consider the trend. You need to consider support resistance levels and some other tools or some other indicators or added on to your strategy rather than just to use the MACD alone. Okay, so that's the buying opportunities. Let's look at the selling opportunities on the same chart. In this case, we see that crossover here. We do see very weak histogram levels there. And as you all would know already, we have seen price move towards the upside. Okay, so anticipating a big move towards the downside with that recent move up, we're not going to see that happen. Because trend was one of the first things we had to pay attention to. And that's why you saw price sit right across. That doesn't really form as a good selling opportunity. So in this case, didn't work. All right, in this case, it didn't work. Now it's gone up. It's hit a resistance level. It started to turn back down a little bit. We see a crossover. We see a formation, that downward move, a formation of that histogram towards the downside. And that's why we saw price move lower, because, and one of the reasons is because of the MACD crossover. Okay, so in this case, it worked very well. Again, we saw a small bounce, hit a level, turn back down again, and still very close to that zero line. MACD line crossed down from the signal line, histogram still pointing towards the downside, gaining that space or that strength. That's why we saw price move very significantly lower again. All right, so that works very well. Then again, you can see that overall trend, right? Overall trend. Oops, let me do that again. Overall trend is towards the downside here. And we saw that price went up, hit that diagonal level, turned back down, MACD cross over here. And that's why we saw that downward push on the MACD towards price, towards the downside as the MACD line crossed down from the signal line. Okay, so in this case, worked very well. And then again, as that price push up, you can see very short-term move up towards, well, very short-term price moving higher, set right across. We did see some crossover here, not a big deal in terms of the histogram, and that's why we saw price sit and then bounce back up again. All right, again, it is back to that trend. It is back to considering trend, not just that crossover level. All right, so this one didn't work. Again, just to highlight to you, 1, 2, 1, 2, 3, 4, 5 examples. 2 worked, 3 worked, 2 didn't work. Again, almost that 50-50 level if you only just considered the MACD crossover without considering trend. All right, so went through a lot of examples here, really to highlight the point to you that you should, right? You always should consider trend and that support resistance together with applying the MACD crossover levels. All right. So we spoke all that about entry levels, right? We went through buying entry levels, selling entry levels. Trading is not just about where to get into a trade, right? As much as you know where to get into a trade, you want to know where to get out of a trade as well. All right, you want to know where to get out of a trade as well. In this case, let's go back to this example. You can see that there was a support level formed here, right? A support level formed here, right? With that line there, we saw price bounce up. Let me just take that away. We saw price bounce move up from that support level, right? A small bounce towards the upside. We see the MACD cross over there, signaling a potential buying opportunity. In this case, you could be looking at, hey, entry there, stop loss just below, stop loss beyond that support level, take profit before the resistance level, right? This is a resistance level here that we find. So before that resistance level, what happens? You can see that price actually climbs up, went up, did hit that resistance level here, right? So you have 2 ways you can look at it. Either look for price to hit that resistance level or your take profit level there. Oops. Trying to draw straight lines with a mouse. That's terrible. All right. So you could be looking at your take profit level there. So it would have come very close. So you either look for it to when to exit your trade is either to your TP, right? Or to a support or resistance level, right? Or when there's a crossover again, right? A crossover again. In this case, it's right at that point there. Okay, it's right at that point, and that's why we signaled there as if that's going to indicate a selling opportunity, then hey, if you have a trade running, a buying trade running, you should close out that trade, not to sell it back down because that recent move was towards upside. You want to close out the trade and see what happens from that point on. All right, so 3 ways to consider to exit your MACD trade is either it goes up, hits your take profit immediately, automatic close, that's straightforward. You could look for it to move towards that support or resistance level. And then also you could look for a crossover to signal to you that you want to close out that trade even before it gets to that support or resistance or your take profit level. Bear in mind, I would rank it in that format, right? So I would think that a crossover will be possibly one of the last reasons I would use as a possible exit signal, right? I'll use the crossover as a last reason for an exit signal because this one is lagging, right? MACD is lagging. So what could actually happen is that it goes up, it turns back down already, and then it crosses over. You would have lost a lot of potential profit there. So crossover will be one of the lagging indicator. I'll use it as the last reason I would get off a trade. First of the 2 will be either take profit or if price moves towards a stop support or resistance level. All right. So that's in terms of a buying opportunity. Where to get out of the trade is at those levels there or for those reasons there. In terms of a selling opportunity, where to get out of a trade. All right, so you can see that using that same chart, we got in there, we got in at that point, got out to that level there, then price continued moving up, right? You wouldn't have, just based on the MACD trading strategy alone, you wouldn't have entered any trades between these points, right? Not perfect examples because nothing happened here. Nothing happened between these points here. We did see a cross towards the downside, but there was a big upward move. That's why we're not going to look to sell it down. And also we can see that a strong support level is there, right? You don't anticipate for price to break that support level. Okay, so what we did see was price move up, tested higher before a reverse back down again, forms a resistance level there. All right, so as price moves lower from that resistance level, you can also see that crossover towards the downside, indicating a selling opportunity based on the MACD. If that gives you that selling opportunity, then we're going to see possibly selling there, stop loss there, take profit just before that support level. Almost a 1:1 risk reward ratio towards the downside, just based on the MACD there. Okay, so this is another example I want to show you, is that where would you close out your trade at that or close to that support level, right? You would have closed out your trade. You don't want to wait for that crossover here. Like I was telling you, it is a lagging indicator. So if you waited for that crossover there, you would have seen that price has reversed a great deal. It bounced off, reversed almost half of your profits before it signals that you should close out the trade. So I would say that's why I say that take profit is first, support or resistance level is the second reason, and then that crossover, use it as the third reason on why you want to get out of a trade. Okay, what you see here, that's the first example. Second example, we can see that price tried to break down, bounced around at this level. We wouldn't have looked to buy there. We wouldn't have looked to buy there because price has been trading lower, so you don't want to be buying into a downtrend. Which is also why we saw price move up, hit that resistance level before turning back down again. Right, as it hits that resistance level, like I was telling you, a potential reversal indicator. You see price consolidating at that resistance level. We see that crossover towards the downside, and that's why we see price push lower. Okay, you can see that if you sold there, take stop loss at the top, take profit at that support level there. Oops. All right. Oops. You take profit right just before that support level there, then you will see that price went down and closed out at your take profit or at the support level. You don't want to be waiting for that crossover, because you do see price bounce back up before potentially turning lower, or you could actually see price reverse back up again. So exit based on take profit, exit based on your support or resistance levels, and then lastly exit based on the MACD crossovers. Okay, so how do you add the strategy to your chart? If you are looking, and I'll share this with you right after this last slide here, right? Combining the MACD with your trading strategies, you could be looking, as I was telling you, always make sure you identify the trend. If it's moving towards the upside, then you want to be looking for that crossover for that further buying opportunity, right? Support resistance levels, you want to be looking for, take profit levels or potential reversals, you look for that crossover, consider that crossover strength, and then that reversal of your using MACD as a potential reversal. Okay, so just to share with you, let me get that away. All right, so to share with you here, how do you apply that onto your chart? If you're using TradingView, you can go into indicators, you can find moving average, convergence and divergence is there. If you are onto MT4, then you can go into the indicator section, you'll find the moving average or the MACD as well. And then you can find the moving average there as well. Okay, so you can just drag it in. It's one of the ones that you can just drag it into your charts. All right, one of the indicators that you can drag it into your charts. Let me just check something. See if I can load that up. Give me 1 second, just check something there. Not loading. That's a good question there. Let me just have a look. Okay. I'm trying to load the MT4 just to show you, but the MT4 doesn't seem to be loading well. Okay, okay, here we go. I'll just put this across just to give you an example. You could be looking, so you go into the navigator section, you look into the indicators, and then you look for the MACD. You can just, I don't have a connection here, so I don't think it'll work. You just drag it across, apply it, and then it applies to your chart there. So you can just see that crossover lines towards upside and also the downside. Okay, so many ways. If you're on TradingView, you can search it on the indicators. If you are on MT4, then you can, drag it right across to your charts and apply it. So just to share with you again, how it looks like in this case, if just look, applying the MACD to your charts. I want to spot a few possible crossovers for you right now. This is the euro dollar on the H4 time frame. You can see that we do have a potential, looks like it's forming a potential crossover towards the downside for the euro dollar on the H4 time frame. Okay, so in this case, you would say that price has hit that resistance level of 1.0041. It's turning towards the downside. My next support level is at 0.99, at about 0.99 there. Okay, so now that we see that crossover, it hasn't crossed over yet, so we're a little bit early. You could be looking for that selling opportunity towards the downside. In this case, about that level, almost a 1:1 risk-reward ratio towards the downside. Okay, so that's on the H4 time frame. If we applied this to the H1, all right, take that line away. Right, you can also see that we have seen that crossover already. So that crossover, oops, let me change that line a little bit so it's easier to see. Happened right at that point, right? So you would have, if you were looking at this on the H1 time frame, then you would say that, okay, I've seen the MACD crossover, I've seen it hit and reject that move towards the upside. You'll be looking for that selling opportunity. Again, stop loss above that resistance at about 30 pips. Take profit could be first level here at about 30, or you could be looking at that downward move about 90 pips. So it's a 1:3 risk-reward ratio towards the downside. Okay, then what happens is after it moves lower, once it clears this level, once price breaks below this level, I would move my stop loss to break even and then write it all the way down again, right? For potential 90 pip move with my stop or with my trade protected at break even, right? So does give you a little bit of an early indication or possible early indication towards the downside as you see price moving lower. Okay, I do think that we might see the euro dollar trade lower because look, strong histograms towards the downside, price at the MACD line quite strongly below the signal line. We could see price go lower towards that point there. Okay, So that's a good example for the MACD. As a beginner, on which time frame can I use trading in the MACD? Okay, so very good question. What I would say is that you should use it on the H4 or the H1 time frame, right? Even if, as a beginner, H4 and H1 for sure. Even if you're a intermediate, I would say intermediate trader or experienced, I would say H1 and H4. Unless you're really experienced and really know what you're doing, then you go below that H1 time frame. All right. Why I say that is because even if we just went to the M15, what you see is that it does get quite noisy. All right. I'll drag this up a little bit. It does get quite noisy. Ignoring that, moving away from that example, if we just looked at that, you'd see that you would have, you would be very heavily influenced by that crossover. You'd see a potential crossover at this point here, thinking that that push towards upside would be a good place to buy. But then you see that price actually sits right across, small upward move before turning back down again. Or you would, in this case, consider a possible sell there because of that crossover, right? But then you realize that it doesn't drop, it bounces back up before finally dropping again. So stay to the H4, stay onto the H4, H1 time frames. It works very well there. If you go into the smaller time frame, it becomes a little bit too noisy. A lot of movements, a lot of crossovers that don't actually play out too well. For example, again, in this scenario here, right, we saw a small crossover. Most people would think that, can it break past this point, push lower, but actually came down, hit that support level and bounced strongly towards the upside. So very good question there. I would stay on the H1, H4 time frame. Okay, so another example here on the pound dollar. Right, you see the pound dollar dropping very strongly back to the H1 time frame. Take that away. Just my previous analysis. Okay, you can see the pound. Oops, where did my indicator go? Take that one away. Okay, so you can see that. This is one example I want to share with you, is that it is crossing. MACD is crossing, but it's crossing below that zero line. It's crossing below that zero line. So it can drop some more, it can drop further, but it might actually slow down a little bit. Right? It might actually slow down a little bit. So just watch out for that. I am anticipating further downside on the pound dollar, but because if I went to the daily time frame, you'd see that it is at a very, very low point. Last time it got to this level was back in 2020. So, if you looked at it at this level here, then a very low point could bounce back up, could fluctuate at this level. And that's why we haven't seen that big push towards the downside. Okay. As compared to this move here. As compared to that, where we actually saw price reject that level, all right, reject the resistance there, turning down, right? And then we saw price drop very strongly with the MACD just slightly at that zero line towards the downside. We saw that big move. Again, pay attention to that support level. That's why we saw price bounce back up again. Right now, trying to trade lower. Looking at it on the H4 time frame, you can also see that crossover is below that zero line. We are expecting it to drop further, but just be a little bit careful. Might slow down, might drop lower before bouncing back up again. Okay, very good question there. One more example. No, where's the US yen? Right, so clear that out. US yen on the H1 time frame. Okay, you can see that we do see MACD starting to cross over at this point. Right, starting to cross over, a little bit of a histogram forming towards the upside. Not perfect because it is above that zero line, but we could anticipate that price could go higher. But you want to pay attention in this case to your resistance level, right? We do see that price has been moving up, but it has rejected that 139 level once, twice, and it's approaching that again. So I'll wait, right? Consider all the points put together, trend pushing towards upside. Price needs to break above that resistance level before we use the MACD, or we consider the MACD as another indication or another confirmation for price to move higher again. Okay, so that's a good one there. You can see here now price again, so forming towards the downside. Here we have two examples, two very good examples here. The first one is price reacts to that resistance level. As price reacts to that resistance level, turning towards the downside, we see a crossover at that point. You can see that price has already moved down. What a lot of traders would have done is they might have, for some other reasons, sold, right? 3 black crows towards the downside. They might have sold at that point. If you missed out on that, or you already sold that, you see price dropping. This gives you another confirmation. Yeah, you could expect price to drop lower, and based on the MACD, if you're already in the trade, gives you that confidence, that confirmation. If you haven't already, then you might be waiting to enter. At that point, gives you that additional confidence to enter the trade. Within the 1 hour, it goes from 6152 to 6126 or 6123, almost a 30 pip move within the hour. Okay, and you would have gotten out at about that. You would have a level there. You would also have a level about there because of that resistance or the interim resistance level. So you would have gotten out of your trade almost immediately, almost within the hour, instead of waiting for a crossover. Okay, so this is another example here. If we did see that crossover, you entered there and waited to exit a crossover, you would have lost most of your profit back and close out at a very small profit there. Okay, so I would say that, again, take profit levels, stop support resistance levels, very important, before you consider the crossover as a level to exit your trade. Now, moving this line slightly lower or slightly across, you can see a crossover again, this time below that zero line. Anticipate for the Kiwi dollar to push lower, but it is very near to that support level. If you did enter into this trade because of the downward move, you would say that selling opportunity, stop loss 16 pips, take profit towards this at this support level is not going to be great, right? It's 10 pips. It's not a great risk to reward ratio towards the downside. So, there are times where you get a signal, right? The signals will always fire out. It will always tell you, there's a crossover here or a crossover there. You also want to consider, is it worth taking the trade? Is it breaking that level? Is it worth taking the trade? Does your stop loss and your take profit make sense if you did jump into this trade? So despite a crossover, not a perfect crossover because it's below that zero line, you wouldn't have gone into that trade because it's too close to that take profit level or that support level there. Okay. Applying this now to the US Swiss franc. Again, you can see that crossover on the H4 time frame, crossover, which saw that big upside move despite it being above that zero line. Okay, dollar index, clear that out. You can see again that crossover, that potential crossover this case also above that zero line, pushing the dollar index towards the upside. You can enter a trade above that zero line, above that crossover, when there's a crossover above that zero line, but just be extra careful. That's not the perfect setup. It is still a setup, but not a perfect setup for that upward move. Okay, then lucky last, share that with you, right? Lucky last, I'll share that with you. Something to watch out for, something to watch out for. Euro pound on the H4 time frame. Euro pound on the H4 time frame. It is reacting very close to that 0.86 resistance level, right? It's tested, failed to break higher, tested, almost a pin bar towards the downside, and you can see that at this point now, MACD is, like the name says, moving average is converging. It's converging, right? So we could actually, what I would be looking for here is if price could, or if MACD could turn crossover, right? It could cross over towards the downside, and then we could actually see price turn down, right? Turn down from that resistance level. If that happens, the next profit level would be at 0.8510 because of that resistance levels there. Okay, so I would be sitting there. I would check back again to see whether price does cross over or turn, or whether MACD does turn down and cross over towards the downside to push price lower. That's a good reversal setup, potentially a good reversal setup. Not ready right now. We do see price moving a little bit higher, so not ready right now, but I'll be watching for that to see whether we're going to see a reversal down. All right, you can see that it's happened quite nicely again at that point there. Reverse hit, reverse push towards the downside. Okay, and this is in a bit of a range, right? It's moving in a bit of a range. That's why we can see both the upside and the downside move on the MACD using the MACD on the euro pound there. All right. So with that, any further questions? Any further questions? One more example. All right. So one more example here. This is the pound yen, right? This is the pound yen at this key support level of about 161. Let's find it at that point there. The 161, no, 161 is a good level. About there, where we see it turning down. We do see a crossover towards the downside. You know, I would be looking for whether price could trade lower to break below that support level and to trade towards either that 160.35 level or even that 159.50 level. Okay, we do see that crossover forming here on the H4 time frame. Alrighty. So if you have no further questions, let me see, any questions? Okay, if you have no further questions, what I'll do is I will leave that with you for now. If you have anything, let's catch up in the next session. I'll be happy to answer your questions on, if you have further questions on MACD, we can get through that, or I look forward to you joining us at the next session. Okay, in the meantime, trade well, trade safe, and I'll see you again. Take care now. Bye-bye.
Hello everyone, my name is Emily. Today our video is about bull and bear markets. So what do we mean by bull and bear markets? Simply put, an asset is in a bull market when prices are going up and investors are optimistic about the future performance of an asset. In other words, when a market, instrument, or sector is on an upward trend, it is generally referred to as a bull market. The opposite of a bull market is a bear market, when prices are going down as most investors are feeling pessimistic. Falling prices create a negative market sentiment. When exactly are we in a bull or bear market? According to the Dow theory, we say we're in a bull market when prices have increased by at least 20%. If prices have gone down by 20% or more, we say that we are in a bear market. However, even though a 20% increase in market prices is often regarded as the start of a bullish trend, most signs of an approaching bull market are not that clear. Therefore, traders use technical analysis to help them recognize bullish signals. And finally, how long do bull and bear markets last? Well, bull and bear markets which last more than 5 years are known as secular, and shorter bull-bear markets are known as cyclical. That's it for today, guys. Thank you so much for joining us. Bye-bye.